Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the relevant and important finance current affairs and the RBI news which are very relevant from your examination point of view. So in today's session we are going to discuss the Monetary Policy Committee statement and the Governor's statement that has been released after the Monetary Policy Committee meeting that ended in August 2024. Okay, so we are going to discuss that what are the highlights, what is the domestic and the global assessment and the outlook that has been provided by the Monetary Policy Committee, as well as we are going to discuss the key rates of the Monetary Policy Committee. So let's get started without any delay, and before starting, do subscribe to the YouTube channel of EduTap as well as join our Telegram channel, because in the Telegram channel you get the PDF of the session. Okay, so the link for the Telegram channel is provided in the description box below. This monetary policy statement, it is very important from the objective point of view, as direct questions can come on the key rates as well as the projections of the RBI, as well as this is also important from the descriptive point of view, as you can use the assessment and the outlook of the Monetary Policy Committee statement in your answer writing. Okay, so Monetary Policy Committee statement 2024-25 resolution of the Monetary Policy Committee. So Monetary Policy Committee statement or Monetary Policy statement has been released after the end of the Monetary Policy Committee meeting that was from August 6 to 8, 2024. Okay, now this was the 50th meeting of the MPC since its inspection in September 2016. Okay, so there are in total 6 members in the Monetary Policy Committee. There are in total 6 members in the Monetary Policy Committee, and the chairman of the Monetary Policy Committee, I hope you know that it is the RBI's governor. Okay, so this is the basic idea about the Monetary Policy Committee. This is the major committee that forms the monetary policy for the country. Okay, so now let's first discuss about the domestic economy assessment and outlook that has been provided by the Monetary Policy Committee. First of all, in regards to the real GDP. So domestic economy, as per the governor's statement, as per the Monetary Policy Committee statement, the domestic economic activity continues to sustain its momentum. That means domestic economic activity is going good. After a weak and delayed start, the cumulative southwest monsoon rainfall has picked up with improving spatial spread. So the area coverage of the monsoon rainfall has increased, and that is a good news because the area coverage is increasing for the monsoon. And in the monsoon, I hope you know that during the monsoon season there are the kharif crops that are sown. So it will be good for the kharif cropping, and that has been seen that this has supported the kharif sowing. So by August 7, 2024, the monsoon rainfall was 7% above the long period average, and there is the spatial coverage that is happening. There is the spatial spread that is happening of the monsoon rainfall, that is the area coverage or the area spread of the monsoon rainfall is increasing, due to which the kharif growing is or the kharif sowing is improving. Okay, so this has supported the kharif sowing with total area sown as on August 2 being 2.9% higher than a year ago. So the yearly data are usually important that you have to focus on, and you can use these data points in your answer writing. Now industrial output has registered an expansion of 5.9% year on year in May 2024. So our kharif sowing has improved, or the cumulative southwest monsoon rainfall that has picked up with improvement in the area coverage, so that has supported the kharif sowing, as well as our industrial output is also improving. So you can understand that the agriculture sector as well as the industrial sector both are working good, as well as our services are also showing the good growth. Okay, so high frequency indicators of the investment activity as evident in strong expansion in steel consumption is happening, high capacity utilization, healthy balance sheet of the banks and the corporates, and the government's continued thrust or the push that is given to the infrastructure spending point to a robust outlook. So not only our agriculture sector, industrial sector or the services sector, but even the investment that is happening in the country, that is also showing improvement. Okay, so now the Monetary Policy Committee that has given the assessment and the outlook of the domestic economy in regards to the real GDP, it has said that the Monetary Policy Committee expects the domestic growth to hold up on the strength of investment demand, steady urban consumption and the rising rural consumption. So this is going to further boost the growth of the country because the investment is good. So our aggregate demand in our country is from the investment, consumption, government expenditure and the net exports. So our investment is improving, our consumption in the rural and the urban area is improving. The government is also giving thrust to the investment activities, as well as the global conditions are also a little stabilizing. Okay, so our aggregate demand is going to grow. That means our production, our domestic growth is expected to grow. Okay, so the MPC expects the domestic growth to hold up on the strength of the investment, the consumption of the rural and the urban areas. I hope this is understandable. Headwinds from geopolitical tension. Now the problem is coming that geopolitical tensions are like after time to time the geopolitical tensions have perspired, or the geopolitical tensions keep on coming up, volatility in international commodity prices. So there is the stabilization that is happening in the global growth or in the global economy. The stabilization is happening, but there is still the volatility in the international commodity prices. There is geo-economic fragmentation that is still persistent. However, these pose the risk to the outlook of the MPC. Okay, that is expecting the domestic growth. Now taking sorry, so taking all these factors into consideration, the real GDP growth for 2024-25 is projected at 7.2%. This is the same projection that has been given in the previous Monetary Policy Committee statement. Okay, so remember that the projection for the real GDP growth for the 2024-25 is projected at 7.2%. Okay, so you have to remember this percentage as directly the question can come on this. Now coming to the assessment and the outlook in regards to the inflation as per the Monetary Policy Committee. So headline inflation, that is your retail inflation, that is your CPI inflation, that is the inflation that is affecting the consumers, or that is affecting the basket of the goods and services that is consumed by the consumers. So headline inflation has increased to 5.1% in June 2024 after remaining steady at 4.8% during April and May 2024. So there is the slight increase that you can see that has happened in the retail inflation, in the CPI inflation worsening. Now this has happened mainly because of the worsening of the food inflation pressures, driven primarily by a sharp increase in the prices of vegetables, pulses, edible oil, along with a pickup in the inflation across cereals, milk, fruits, and prepared meals. This has pushed up the headline inflation. So the headline inflation you can see has slightly increased, and this is mainly because of the worsening of the food inflation pressures. So from the food inflation, and as you know that in the CPI inflation, the highest weightage is given to the category of food and beverages. So if the food inflation is increasing, this impacts the CPI inflation in a great manner, because the food and beverages has the highest weightage in the CPI, in the consumer price index. And if the food and beverage, or there is the food inflation that is rising, so that affects the CPI inflation greatly. Okay, so that's why we can see that there is the increase that has been seen in the retail inflation, in the CPI inflation. The fuel group remained in deflation. Deflation means decrease in the prices, of the fuel group. So there is the decrease that is happening in the prices of the fuel group. This reflects the cumulative impact of the sharp cut that has been seen in the LPG prices in August 2023 and March 2024. So this is the basic idea, that the fuel group has remained in deflation. Core inflation. Core inflation is your CPI inflation excluding the volatile food and fuel segments. Okay, so core inflation is your CPI inflation excluding the food and fuel, that is the volatile categories or the volatile prices. So core inflation at 3.1% in May to June touched a new low in the current CPI series, with core services inflation also at its lowest in the series. So you can understand that the fuel group remained in deflation. That means prices are decreasing for the fuel group. In the core inflation, the prices are rising, but very slightly they are rising. In the core services, there is inflation that the prices are rising, but very slightly, and they are at the lowest in the current series. So the main problem is this food inflation in our country, okay, that we have to tackle. Now the steady progress that we have seen in monsoon, I have told you in the start of this session only that there is the progress that is happening in monsoon. The monsoon rainfall is happening good, and the area coverage is also increasing. So this has improved the Kharif sowing, and there is the pickup that has happened in the Kharif sowing. Adequate buffer stocks of food grains we have. Easing global food prices. The food conditions are somehow stabilizing. These are the positives for containing the food price pressures. Okay. Now adverse. So this is until now. The monsoon is good, the Kharif sowing has improved in our country, but you know that the adverse climate events keep on happening. So this can pose some problem in our country. So adverse climate events remain an upside risk to the food inflation. Crude oil prices also remain very volatile. So crude oil prices continue to be volatile on demand concerns and geopolitical tensions. The revision that has happened in mobile tariff rates, so Jio, Airtel, they have increased their mobile tariff rates. So the revision that has happened in the mobile tariff rates is likely to lead an increase in the core inflation also. That is the CPI inflation excluding the food and fuel. Okay. Now, manufacturing services and infrastructure firms surveyed by the Reserve Bank. Recently, the results of the survey has been released for the consumer confidence survey and for the inflation expectation survey, for the survey on professional forecasters. So these survey results have been released. So as per the result of the surveys, the Reserve Bank of India is saying, or the Monetary Policy Committee is saying, that the manufacturing services and infrastructure firms surveyed by the RBI expect a pickup in the selling prices in the second half of this year. So this is the expectation of the manufacturing services and infrastructure firms, that the selling prices or the prices are going to increase for these categories. Okay, as well as households inflation expectations have also gone up and consumer confidence has weakened. So this is a problematic situation, because whenever the consumers expect, whenever the households expect that in the future the prices are going to rise, so what we are going to do? We are going to increase our demand right now. So let's say that I want to buy a mobile, and I know that in the future the prices are going to increase for mobile phones, for the electronic products. So I will start demanding more mobile phones, more electronic products right now. So the demand suddenly for the electronic products in the country, this will happen, that in the future we are expecting that the prices are going to increase. So we will start demanding more of the products right now, and now the demand will suddenly increase. The supply usually lags behind, so the prices will start increasing. So when the people expect the inflation in the future, they are bringing the inflation in the country in a way. Okay, so the households inflation expectations have also gone up. This is a little problematic for the country, and the consumer confidence has weakened. So assuming all of this and assuming a normal monsoon, CPI inflation for 2024-25 is projected at 4.5%. So this is all about the domestic economy. We have discussed about the real GDP, we have discussed about the inflation scenario, and we have discussed that what is the scenario right now, what is the expectation for the 2024-25. So we have discussed the assessment of the domestic economy and the outlook. Okay. Now moving forward with the global economy, there is only one paragraph that we have to discuss. So basically the global economic outlook remains resilient, although with some moderation in pace. Okay, so the global economic growth has remained resilient, but with a moderation in pace of the global growth. Inflation is retreating in major economies, but services price inflation persists in the major economies. So this is a problem for the major economies around the globe. International prices of food, energy and base metals have eased since the last policy meeting of the Monetary Policy Committee of India, with varying growth inflation prospectus. So now the growth and inflation prospectus is different in different countries. In some countries inflation is still a problem. In some countries the inflation is going down and they are trying to boost their growth. So central banks, seeing the or seeing the varying growth and inflation prospects, the central banks are diverging in their policy paths. Some are increasing their interest rate, some are keeping their interest rate constant, and some have started to decrease their interest rate below. So this has created a volatility in the financial markets, because you can understand that the money will be taken to that country where the interest rate is high, because we are getting more profits. If foreign portfolio investors, let's say I have 1 crore rupees, or I have converted that 1 crore rupees into the dollars. Now I am investing that dollars in US because the interest rate is very high in US. Okay, so I want to get higher interest, higher returns. So this kind of volatility is being created in the financial markets because the central banks are diverging in their policy paths. Okay, so amidst recent global sell-offs in equities, so there is the sell-off is happening in some markets, the equities, the shares are being sold and they are invested in some other markets to get the higher returns. Dollar index has weakened, sovereign bond yields have eased sharply. So sovereign bond, they are like the government securities through which the governments raise the money. So sovereign bond returns, yield means returns, have decreased, and gold prices have soared to record highs. So this is the global economy. The international prices, you can see it is easing in some categories, but there is still very much volatility that is present in the global economy. Now coming to the major decisions of the Monetary Policy Committee. So we have discussed the assessment and the outlook for the domestic economy. We have also discussed in brief about the global economy. Now coming to the major decisions of the Reserve Bank of India, of the Monetary Policy Committee of the Reserve Bank of India. So the MPC has decided to keep the repo rate unchanged. Okay, we will discuss that why this repo rate is unchanged, but the MPC at its meeting has decided to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.50%. Okay, so this is the liquidity adjustment facility, in which this is the liquidity adjustment facility corridor, in which at the bottom, at the floor, you have standing deposit facility through which the RBI takes the deposits from the bank. In the middle you have repo rate through which RBI lends to the bank. So this is in the middle. MSF is the marginal standing facility. This is the facility through which RBI is lending to the banks in the emergency kind of situation when the repo rate facility has been used by the banks. Okay, so MSF is for emergency kind of situation, and it is the ceiling in the LAF corridor. So MSF is greater than the repo rate by 0.25%. SDF is lesser than repo rate by 0.25%. So if repo rate is 6.5%, you can understand that SDF is how much? Tell me, SDF is how much? It is 6.25%, because SDF is lesser than the repo rate by 0.25%. If repo rate is 6.5%, the MSF will be 6.75%, because the MSF is greater than the repo rate by 0.25%. So the MPC has decided to keep the repo rate unchanged at 6.5%. The MPC also decided to remain focused on withdrawal of accommodation. Withdrawal of accommodation means that in the future the RBI is going to keep the repo rate constant at the high percentage, that is 6.5%, or RBI can increase the repo rate. RBI is not thinking of decreasing the repo rate right now, because we have to target the inflation that is around 4%. Our CPI inflation, our consumer price index inflation, our headline inflation, or we can say the retail inflation should be around 4%. That is the target, plus minus 2%. That is, it can go to the lower tolerance level of 2%, or it can go to the upper tolerance level of 6%. Okay, so this is the idea, that we want our inflation to be around 4% plus minus 2%, that is the floor of 2% and the ceiling of 6%. So we want the inflation to be around 4%. So the RBI, the MPC is saying that they are focused on the withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting the growth. So now there is the risk from volatile and elevated food prices. This remain high, which may adversely impact the inflation expectations and result in spillover to core inflation. This we have discussed, and that's why the RBI is saying that we have to be focused on the on aligning our inflation to the 4% mark, and we want the stability in our country. We want the inflation to be around 4%. We don't want it to keep on fluctuating in between 6% or 6.5% or 5.5% and such. We want the inflation to align to the target of 4%, because when the inflation is aligned to a stable target, then we can focus on our growth. So there is the risk to volatility, there is risk of food inflation, there is risk of this headline inflation increasing, and that's why we are focusing on withdrawal of accommodation. That as soon as we expect that the inflation is going to rise, we will increase the repo rate, or we are going to keep the repo rate at the high percentage. Okay, so the MPC reiterates the need to continue with the disinflationary stance, that we have to decrease the headline inflation. Right now it is around 5.5%. We have to bring it to the 4% mark until a durable alignment of the headline CPI inflation with the target is achieved. So we want the CPI inflation, the headline inflation, to come to its target, that is around 4%. Enduring price stability, the long-term price stability or the price stability in the country sets strong foundation for sustained period of high growth. So that's why RBI is focusing on the withdrawal of accommodation, and the RBI is keeping the repo rate at a high percentage, at a good percentage, that is 6.50%. So this we have discussed. SDF is 6.25%, RR, that is repo rate, is 6.5%, MSF is 6.75%, and the RBI is focusing on the medium term target for CPI inflation of 4% plus minus 2% while supporting growth. So now this is how the website is showing the targets, that 6.5%. So for the ninth time, the repo rate has been kept constant at 6.5%. Okay, so the standing deposit facility and the MSF rates are aligned with the repo rate, so they are also constant for a period of time. Okay, so now you know that this, in the, as I have told you, that in the CPI inflation the highest weightage is given to the food and beverages, that is nearly 46% of the weightage is given to the food and beverages. So if the food prices are increasing, they are going to impact the CPI inflation in a great manner. Okay, now these are the key highlights that we have discussed. So benchmark interest rate retained at 6.5% for the ninth time. It is for the ninth time that this repo rate has been kept constant at 6.5%. To remain focused on withdrawal of monetary policy accommodation to check inflation and support growth. So RBI has said that we are withdrawing the accommodation. That means we are either going to keep the repo rate constant at a high percentage, or we can increase it. We are not even thinking of decreasing it. No. Okay, so GDP growth forecast for financial year 2024-25 retained at 7.2%, and the retail inflation projection also retained at 4.5% for 2024-25 financial year. Global economic outlook remains resilient, although with some moderation in the pace of the economic growth. Domestic economic activity continues to sustain its momentum, that is good, and because of which reasons? Because of the good investment, because of the urban demand, that is good, as well as the rural demand, that is also improving. The current account deficit is manageable. Okay, that is 0.7% of the GDP for the financial year 2023-24 as compared to the 2% of the GDP that was in 2022-23. So this data point we have discussed again and again in the financial stability report, in the balance of payment document, that the current account deficit has decreased from 2% to 0.7% in 2023-24. So that is a good thing, okay, that the current account deficit has decreased. Okay, and in the fourth quarter it was in surplus. So can you tell me that in the fourth quarter the current account was in surplus, that was dash percentage of the GDP? So that you have to tell me, okay, because this is also what we have discussed. Now foreign exchange rises. Now this is important, that the foreign exchange reserves rises to historic high of $675 billion. So that is good news for our country, that our foreign exchange reserves are improving. Indian rupee remained largely range bound in financial year 2024-25, that it is not depreciating too much, it is not appreciating too much. So that is good, that it is within a range, that is a manageable range. So rupee is fluctuating, but within a range that is manageable for our country. So now we have discussed the Monetary Policy Committee statement. I hope you have enjoyed this session. Do tell me that what is the answer of the first question. Very easy. I hope you will be able to tell the answer very easily. Now coming to the second question, again this is a question. I hope you will be easily able to answer this question. Just tell me that which of the following statements is correct. Okay, so I hope you, just by seeing this question, you are able to tell the right answers. Okay, so do tell me the right answer of the homework questions. Now before going forward, I want to show you the website of EduTap. Yes, if you go to edutap.co.in, you can come to this website. Now here in the free material we have prepared the blocks for you so that you can know about the different examinations. You can know more about the examination that you are preparing for. So if you are preparing for a particular examination, let's say RBI Grade B, you can get more exam information from this website. Okay, this is the blocks are created for you so that you have the clarity about the examination that you are preparing for, as well as you can get more of the exam information. If you want to take the strategy, you can take the strategy for the particular examination. Whichever examination you are preparing for, you can take the strategy for the different components of the examination. If you want to read that how the toppers have achieved their dream, so you can read it here. If you want to know about the toppers that have achieved their dream for the RBI Grade B, you can read that how they have achieved their dreams, what was the strategy that they followed. Okay, now if you want to know about the courses that we are providing for the RBI Grade B or for any examination, you can go to the courses section, to the exam section, and you can see that okay, these are the courses that we are providing. There is the quick revision batch that is going on for RBI Grade B for the phase 1. So here we are getting the live classes, current affairs, chapter wise tests, sectional tests, and the faculties that are teaching you, that also you can see. So this is all that is provided in the website. Okay, now thank you very much. Do tell me the correct answer of the homework questions. Thank you all. I hope you enjoyed the session. Do tell me the answer of the homework question. Thank you everyone.